Good morning and welcome to the October 7th edition of the Mortgage Market Update. Hope you're having a great Monday morning and enjoying this cooler weather that we're seeing here in the DFW Metroplex. It's pretty amazing and we're going to get this all week, so that will be nice. As for mortgage bonds and the 10-year Treasury, mortgage bonds are up right now 8 basis points. We're up 11 from where we started the day. We actually started the day down a little bit, but 10-year Treasury, oddly enough, also up. It's very rare that we see 10-year Treasury yields and mortgage bond prices moving in the same direction. So we'll have to see which one of those gives way to the customary reverse direction of or inverse relationship that they have. So the good news going into this week is that we had an incredible week last week. The month of September was kind of a rough end to the month, but we started October in a really good direction. We had all week last week, we had mortgage bond prices up, which gave us improvement in mortgage pricing. And we started the day today with that same level, improved mortgage bond prices, which hopefully carries us through into improved mortgage rates throughout the week. So we'll keep an eye on that. But we've got a very data heavy week. And then we also are going to hear from Fed Chair Jerome Powell a few times throughout the week as well. Today being the first, we're going to hear from him at about noon Eastern. Tomorrow, we're going to hear from him just before 1 o'clock Eastern. Now, he spoke on Friday, so I don't know that we're going to hear too much additional information that we didn't hear on Friday. But anytime Mr. Powell decides to address the media, it's always going to be an important, potentially market-moving information that he talks about. So we'll keep an ear out for that. Later this week, on Wednesday, we've got the FOMC, the Federal Open Market Committee meeting minutes are being released at 1 o'clock Eastern. So we'll get to see what the actual meeting minutes look like from the last meeting and see if that has any market changes in it as well. And then on Thursday, we've got CPI, which is Consumer Price Index. CPI is the Fed's favorite indicator of inflation, so we'll want to look at that and see what direction that's heading. And since I hadn't talked to you last week, Friday, when the jobs report came out, market was expecting about 140 to 145,000 jobs created for the month of September. We only got about 135,000 jobs created. So just missing the mark there. Mortgage bonds reacted favorably. But unemployment rate ticked down from 3.7 to 3.5%. So it'll be good to watch to see if we've now hit a bottom in the unemployment rate or if we continue to trend down in the coming months. Now, some of that job creation reduction is probably attributed to cyclical seasonality. Obviously, this time of year, until we get into the Christmas hiring season, we have a little bit of a lull from the summer hiring season. So we'll have to see where we spike back up to, if at all, going into the winter months. But earlier this year, we were hitting north of 200,000 in job creation on a month-to-month basis. So we've declined from that pretty dramatically. But again, some of that's going to be attributed to the seasonality of the economic cycle and the hiring cycles. So keep an eye out for everything this week. Right now, mortgage bonds are in a new trading range. So if we can hold that range, then we may get to see mortgage rates improve over the course of this week. The 10-year Treasury, however, is sitting right in the middle of a very, very wide range. So that could give us a little bit more volatility depending on which direction that it breaks out based on any data that comes out this week. So we'll want to keep a really close eye on that. At the moment, it's a great time to be floating. We've seen great improvements since the beginning of last week. So all of your buyers are in a great position if we're floating right now to try and capture the best possible rates in this short window that we've got. But if you have any questions, don't hesitate to leave them in the comments below, and make sure you check out the charts in the Twitter link above. Have an incredible week, and I'll catch up with you next Monday.